Welcome to the November edition of AML Voices. I'm your host, John Byrne. This one is on global compliance trends and financial crime compliance. And just want to say up front, because we're so pleased to get these panelists, their schedules were pretty difficult and challenging. So we are pre-recording this event, so there will be no Q&A. But obviously, when this runs on November 20th, if you have additional questions, you can always send them to us at RightSource and we will follow up for you. So we appreciate that. But as I said, we're really happy to have this panel. Let me introduce them and we'll just jump right into it. David Howes is the Group Head of Compliance, Financial Crime, and Conduct Risk at Standard Chartered Bank. David joins us from London. William Langford is Executive Officer and Deputy Chief Compliance Officer at Mitsubishi Bank and Global Head of Financial Crime Compliance. And like David, a long history in AML, CFT, sanctions issues. And Vesna McCreery. Among other things, Vesna is now the chair of our newly constituted International Advisory Board, but does quite a bit of other things for us at AML RightSource. So first of all, folks, I want to thank you all for taking the time today. And we have a number of issues that we talked about in the pre-call. Let me just jump and do sort of a round robin initially. And I guess, David, I'll start with you. What's the value proposition of a consistent approach to the various global compliance challenges that you and your peers have? And then anything else you want to mention as an open, and then we'll dive into some of the other topics.
Sure. So I guess sort of a couple of different perspectives on that, John. So one is the perspective, like I obviously live with as a compliance officer in a big global bank, is if we're not trying to do things on a consistent basis, it's increasingly challenging to execute effectively. And if you don't execute effectively, you don't control the risk effectively. So that I'd call that the kind of narrow perspective. I think then the broad perspective is that, like, notwithstanding everything that's going on in the world, there are, to my mind, like three pretty big trends that we're facing into. And wherever you are in the world, if you're not thinking about those trends in a fairly consistent way, and if the industry as a whole isn't moving forward together in combating them or dealing with them, you create that kind of space of the weakest link in the chain being the link that breaks, and then the overall effectiveness of the regime is in question. So, my three trends would be technological, policy, and geoeconomic. Happy to expand on them, but I might sort of hold those thoughts for later on in the dialogue. And John, let you sort of take some opening remarks from others first.
Thank you, David. William, you have been at a number of financial institutions, not unlike a lot of your AML chief compliance peers. And obviously, you've seen it from the U.S. perspective, even though you were very involved with Wolfsburg, which we'll talk about later. But now you're with a bank that's based in Japan, but obviously has global footprints. Sort of expanding on what David said, again, what's the need for consistency that you've seen in so many roles that you've had?
Yeah, and John, appreciate the opportunity to join, and thank you for reminding everybody that I cannot hold a job. Appreciate that. Look, I think the lesson of the past 20 plus years has been that it is just simply never going to work if you're not coordinated, and for every reason that David eloquently stated. I would say from the perspective of perhaps the unique journey of MUFG, an institution that traditionally had that sort of siloed approach perhaps and didn't focus as much on the integration. And so we spent a good number of years here building out the integration because it just simply wouldn't work. You couldn't manage the risks. We couldn't speak to the risks. We didn't know what risks we faced. The pleasant surprise, I think, through all of this was when we did get our arms around it and all the locations in which we operate, the risk wasn't perhaps as much as people worried it might be. You saw a great deal more consistency in the products and services that were offered, alignment of the controls. A big focus from my perspective also is on efficiency. And I just can't be efficient if we're not running a global program. And we'll talk more about the complexities today versus yesterday about running a consistent global program. But I'm telling you that when you align it, when you start to have that, and even if your systems aren't entirely common, if they're managed in a common way, your excess costs drop and you can defend yourself and understand much better where the money's going. And I'm telling you, from a communication perspective with our business partners, it's been invaluable. So again, for every reason that David articulated, it's you just can't do a global program unless you're running it consistently these days. And once you set it up and set that framework up, it can then become a model for other control functions.
Vesna, we're going to talk in a little bit about how you measure effectiveness, but in your role overseeing what our clients do, obviously you have a bird's eye view basically of what David and William are talking about, and that is clients that may not have or are striving to have a stronger global consistent approach. So from where you sit, what do you see with some of our clients, but also some of their peers, and building off of what David and William said, which is so necessary for an effective program?
Well, in simplistic terms, if I wanted to just say one sentence about it, I'd say it's delaying our ability to fight actual financial crime. And we are all focusing on a lot more of administration, of managing change, and a lot of change. And that includes both processes, policies, and procedures on which those processes are based, as well as any technology, because technology is very expensive, especially, and it comes after your policy and procedure and your that side of the process is sorted out. And so then you are really investing a lot of money and time. But if you have to create 15 versions or 50 versions of different jurisdictional requirements in each country for your transaction monitoring, for now your sanction screening, for various PEP variations that we have, for collection of ultimate beneficial ownership that's diverging again, which we thought was coming together. It's really difficult and it's expensive, and it flies exactly in the face of the things that we're seeing that Wolfsberg is rightly pointing out. They're talking about efficacy of the transaction monitoring program, but they're talking about transaction monitoring as in monitoring everything, so not just transaction monitoring. And we see that that's creating a burden. So instead of making it cheaper and faster, we're seeing more work and more cost, and that's a really tricky one for our clients right now.
David, when we chatted earlier, you mentioned the concept of effectiveness. That's also both a theme of what FATF is looking at in terms of measuring during the evaluation process effectiveness, where in the past it was basically, do you have a policy? Do you have a procedure? They didn't really measure whether there was enforcement actions, whether, all the ways in which they look at that now, which is obviously pretty important. But you mentioned that in terms of the financial sector, measuring the effectiveness of policies, procedures, and I know you mentioned geopolitics. I'd add operations to that. Talk a bit about why that's important. I think we all understand generally why that's important, but also what are some methods of measuring effectiveness that you and your peers have undertaken? Because I think that would be a great recommendation to our audience.
Thanks, John. So I love this topic because I think it's sort of it's an evergreen, right? You can always try and be more effective. And I was reflecting also on some of what Vesna was saying just there in terms of the challenges of deploying things consistently versus every different country that you're operating in wanting a different model of it. And it seems to me there's there's two or three things in play in what I kind of describe as the policy space, some of which are making life more difficult to implement effective programs, and some of which are actually helping. So in the kind of more difficult space, the world isn't set up to make life easy for global banks. So the reality on the ground is however much we might want to implement in a consistent way, whether it's specific to the AML space, and you'll get markets like gold plating rules from the FATF with probably good intent, but the result is you end up with add-ons to your global approach there. So whether it's that or whether it's actual conflict in the public policy environment, so things like data sovereignty and wanting greater localization of that, cutting across local programs. You've got pressures like that are sort of mitigating against the consistent, effective execution. But on the opportunity side, so to speak, like one of the things that I think shifted significantly in the last 3 or 4 years, but I'd go all the way back to the kind of post financial crisis era when the big AML enforcement actions were, coming out almost every week. Is I think there's a recognition that in the policymaking environment in places like the FATF that like the problem we have on tackling financial crime is one that A, we're not winning on yet, and B, not going to get solved by like resourcing up to an almost infinite level within the financial sector. So like the banks, I would say, and in places like Wolfsburg, were recognizing that when we started talking more about effectiveness 2019, 2020, around there. And I think where we've had some success is in like building the recognition that if we're going to tackle the problem, so how do you get at actual financial crime rather than simply complying with, I say simply, it's not always simple, but rather than merely complying with regulation, like if we're actually going to tackle that, we're going to have to think about doing some things differently. And the core elements of the Wolfsburg focus on effectiveness that both William and I would be advocates for, like, yes, number one, apply law and regulation. Number two, proportionate risk-based systems and controls against the risk that you're abused for illicit finance. But then that third bit, and this is both the most complicated to measure, but I think in some ways it will become the most important, like providing highly useful information to the authorities in priority areas. And it's that, for me, is the pillar that's been historically like missing in how we go about measuring ourselves. And the work being done in Wolfsburg and elsewhere, embryonic though I think it is, starts looking at things like, well, how many of your SARs do you get follow-up requests for, and how much of the intelligence we're getting through public-private information sharing partnerships is resulting in effective investigations, that type of measure, as opposed to what's my TM false positive detection rate or alert rate, which is where we've kind of got stuck historically when we've been thinking about effectiveness.
William, we've known each other for a long time, and you obviously started off when I met you in the government at Treasury and FinCEN. And I can recall in the early days, the conversations that you and I'm building to an effectiveness question, but I remember in the early days, we would talk about the value proposition of SARs. David mentioned, feedback in general. And you were always a very strong proponent of strongly crafted SARs, and that they would be effective. Law enforcement would, but then once you went to a larger financial institution, it became really challenging, if not impossible, to micromanage that process. So to David's point, it's one thing to talk about the effectiveness of one of the areas of coverage of STRs or SARs, quite another because of the volume that you folks represent. So long-winded way of saying, talk about your view regarding effectiveness and those sorts of examples, because I think the goals are great, but it becomes really difficult to reach those goals given the scope of what you folks have to deal with.
Yeah, I had such a youthful naivete working at FinCEN. I almost wish those days were still here because everything's more then you go into the real world and you get knocked on your ass and blown up and you think, okay, now we got to get to it. I do think though that it is right for this pivot, because what I would argue is over the past time leading up to where we're focused today, and this is something we still have to guard against, right? It's about the program, stupid. You've got to have the program first, because what happens is you tend to have the loudest voices for effectiveness are the ones that don't have the coverage to begin with, or don't have the necessary prerequisites. And then you're exposed, because then when someone's been talking about, let's fight money laundering, it turns out they didn't know what they didn't know. Now that we've all invested so much, and I would credit, again, the overarching supervisory structure for pushing us here. Now I think it facilitates it, and look, I think the IRSCI recent initiative on this is excellent. It is very specific from a good friend of ours, Lauren Corr, who has lived in all sides of this and says, "Here, let me help you." What I find remarkable.
And then just to interrupt a second, that's the CI first program, right? You're talking
Yeah.
about?
Yes.
Okay.
Yeah.
Anyway, go ahead, sorry.
It's somebody who's been in the business and now is over there trying to facilitate this flow of information. What I'm struck by, especially when we have our Wolfsburg events and we bring people in from all over, the concept of law enforcement feedback means so many different things. There's so many different law enforcement stakeholders. And what does that mean to say you're going to get feedback? It's feedback from one or the other, the absence of sort of this global FIU that we talk about sometimes. And what exactly is that? And I think that's part of the biggest challenge I see in effectiveness is what may be effective to CI may not be effective to Interpol or to somebody else who's working. So how do we begin to say the type of feedback we're going to get has to be calibrated to the various audiences that we have, and then how does that feedback in? And what I would say is the link here is one, and we'll talk more about the U.S. in a moment because they're really pushing on this. The link is the recognition by the supervisory structure of the various forms of feedback that show us the value or the effectiveness of it. That's going to vary. It's highly sophisticated and complicated, but it's the way it is. And if we meld those two, then the instances of localized effectiveness can be fed back into a broader program and understood, and allow us then again to not spend our time, banging against a pile of rocks, and hopefully spend our time on the things that are more valuable.
Vesna, we want to turn to the various compliance issues in the different jurisdictions. And we had talked pre-recording about Singapore. We're going to talk to the U.S., as William mentioned, Australia, EU, and UK. Pick some of those jurisdictions, their compliance challenges that you're seeing, and then we'll ask David and William to weigh in as well.
Well, David is an expert on Asia Pacific, as is William from Japan perspective. So I will definitely leave a lot of space for them there. But maybe I can touch on Australia and New Zealand because they're so distant, but they also are very much part of the ecosystem. Their banks have, roles to play in the US, in the UK, across Asia Pacific as well, and vice versa. And I think what we're seeing there is that FATF, is effective by pushing that there is an equalization of requirements. So we've seen changes there. They're still catching up in some ways. So KYC and enhanced due diligence are coming up the curve in tranche 2 in Australia, and there are rules tightening in New Zealand as well. But they're also doing some things really well. For example, on the fraud and scams, in Australia, they've connected beyond the usual audience. And so they've touched also social platforms. So we see that that's probably one. I mean, the UK has gone 2% down in fraud and scams this year, but they've gone down by 28 or 29%. I don't remember exactly, because of that cooperation. So they're public-private for that particular, for fraud, has gone wider and has had a very, very strong effect. And this is where we actually see effectiveness measured, although it's fraud. But these days, of course, we all know that fraud is very much coming under the umbrella of financial crime, and there's much less separation. I'm sure William and David can talk to that as well.
David, talk a bit about some of the things going on in Asia Pacific, and certainly if you want to mention the EU as well, just in terms of some of, obviously high level. We could talk hours about each of these jurisdictions, of course, but just high level, what are some of the key themes that you see in where you sit? You're on mute there, Dave.
Thank you, John.
Perfect.
I was going to say, sort of going back to kind of some of the discussion we were having on effectiveness and innovation, like one thing that I would sort of flag out as being a trend in Singapore and Hong Kong as two major centers in Asia Pacific, but it's true here also in the UK. It is like really increased focused on private to private, private to public, effective information sharing. So Singapore, big initiative kicked off a couple of years ago there, 6 banks working together in something called Cosmic. The MAS is going to be reviewing that middle of next year, I think it is, across the typologies that were in focus initially. But the pillars within it are about kind of one-to-one information requests and information sharing between the members, but also broadcast out of kind of grey list names and network analysis across those different banks. And I don't think we disclose the figures publicly, but we've had really good results in terms of where there has been that kind of cross-industry sharing, really good results on identification, SAR, and like flushing bad actors from the system. So I put that in this space of innovating around what's actually going to be more effective at getting at underlying financial crime challenges. And you've seen here in the UK some changes to the law, better to enable information sharing as provisions within the Economic Crime and Corporate Transparency Act that was implemented last year, that are now beginning to result in greater, I suppose, experimentation and engagement across the banks. And over in Hong Kong, I think it was June of this year, they just updated the banking ordinance to support information sharing where financial crimes are concerned at a kind of natural person level. And we'll now look at like, well, can we use the infrastructure that the Hong Kong authorities already had in place on corporate clients to take this forward? So like that's where I'm super encouraged that the regime and the regulatory focus is going in a direction that's effectiveness focused. I'm a bit more nervous, candidly, about the progress in the EU and actually in plenty of other markets. So I think the downside with some of the EU reforms, setting up AMLR, may well be long term really effective, but immediate term it creates a lot of work that's quite internally focused. And I think they've got 20 plus regulatory standards and guidelines to get out by June of next year. That's a lot of kind of rulemaking, if you like. And some of it's still pretty analog. If we're still talking about hard lines on timescales for periodic reviews, I don't know how that's going to help us in a digital age. And without sort of picking on individual markets across some of our footprint, Asia, Africa, and the Middle East, a downside I would definitely flag with some of the FATF reviews is there's almost like a desire to be seen to be doing more. So we will run into things like, you've got a hard coded 7 days from transaction to filing the SAR, and it's the transaction, it's not the point at which you became suspicious. Like that's not, I don't think that's helping us get at the underlying purpose. But if I sort of step back from it, you've got the future's there, but it's really unevenly distributed. And what I'd like to see is a bit more of that thinking on information sharing and effectiveness becoming the mainstream across all of our markets.
Just a quick follow-up, David. So do you see the EU with all the rulemaking that they're doing, is it correct to look at what's happening there, that they're being more more concerned about supervision than, say, perhaps the US? It's not a facetious question, but it seems to me that at least what we've been following, that the EU is being pretty, I'll use the words, aggressive, not just with the rulemakings, but with the fines and penalties. Is that a fair assessment, or do you have to wait a bit to see if that really holds?
Yeah, I think if I step back and look at the way it's being configured,
Okay.
like I'm not, the risk-based methodology, if you like, is very focused on the client risk assessment. I'm not sure it's going the whole way through the system, notwithstanding the kind of intent of, well, AMLR should look after the biggest, most impactful. That would be kind of point number one.
Right.
I mean, I think on fines, probably with some exception, or major interventions, the EU historically hasn't pushed as hard on as certainly the US and to a lesser extent the UK. And I think there's a bit of reaction to some of the events like 3-4 years ago, stuff like the Wirecard fraud, that's driving that response. I guess it's the old adage that if you walk around with a hammer, everything starts to look like a nail. And my sort of concern is that the EU reaction is by default, well, it's regulation and it's institutional. And that, like, I'm not knocking that as a concept. That might all help us over the long run. But how much is that driving like positive intervention in the immediate term? I'm not so sure. Whereas actually maybe at some of the national level, I was talking about information sharing earlier, challenges with it, but like the Dutch did a lot of really innovative thinking early on in that space. And I'd probably be an advocate for innovate and experiment and focus on what works, with the impact on the crime being the ultimate measure, not can I write a really complex set of rules that everybody must then follow, because I'm not sure following them will result in the outcome that you want.
Oh, that makes a lot of sense. William, it's safe to say that in the US, there's been a dramatic change since January in terms of policies, executive orders. We've done interviews on a lot of that in detail. Um, couple of years ago, when they passed in the US what was called AMLA, there was the thought that that was going to help the infrastructure for AML to be much more efficient. It seemed to be bipartisan in terms of people saying, yeah, it's time to look at these 40-year-old laws and make some adjustments. But I'd have to say where we are now is challenging because it's a tad bit chaotic. So from a oversight in your role as a compliance leader, what are you telling your staff and your peers and colleagues just in general? I know not everything is shaken out yet, but just give folks a sense of how the US, and I guess one of the clear examples is early this year, they came out and said that for corporate transparency, domestic entities are not required to file any longer. Now, they didn't get rid of the CDD rule. We don't have to go into the weeds on that, but that's a clear change from previous administrations, regardless of party, right? So just in general, how do you talk to your board, your senior leaders, and your staff about where we are today? Give us a sense of that.
Yeah, happy to. So it's essentially buckle up, right? There are big words being thrown around and a lot of noise. And I've said, be patient and let's see what actually changes first. And communicating with home country Japan, JFSA, or the board in Tokyo, it's like remember the standard we deployed globally for our institution was not a U.S. standard; it was the standard, right? What we needed to have for a program that met the requirements for various jurisdictions which we operate. So one, we're not going to change the global program per se, but two, we got to see what's actually going to manifest itself in the U.S. and actually be deployed, and then come back to you and explain whether or not we think we can see some advantages through that. So the rhetoric itself is awesome. In a way, right? And the new undersecretary's recent comments are just, we're gonna do this. The challenge, I think, is the reality of this, and you referenced prior legislation. I think that's right. Everybody agrees on what the problem is, but finding a solution while still maintaining what it is that we want to maintain, I think, is the perpetual problem with it. And what I would point to in terms of the good news, right? I think the level of discussion that we're having on the intersection of supervision as well as policy is more than I've seen it in the past. You could be the greatest policy maker in the world, but if the supervisory structure continues to drive in a different direction, it's just not going to work. And so what we struggle with is how do you communicate that? And I think fundamentally the challenge is that's not easy. If you instruct somebody that your job is to validate and verify that the program meets expectations, that's a much more difficult task than it is to have a policy out there that says, I want you to focus on the highest risk, right? It's the age-old problem. You saw some recent movement in the U.S. The FinCEN came out with some guidance on SARs, sort of old ghosts, and you'll appreciate this one, the potential, the legislation in the Senate to raise the thresholds on CTRs and SARs. I got to chuckle out of that one, John, given our history. I think these are good first steps, and in some cases they can make an immediate difference, right? The required 90-day review that really grew up out of a single comment in an old SAR activity review of FinCEN putting flesh around that is great, but FinCEN also is in a difficult position because if it's suspicious, you have to file. And so I think we're going to see something more. I do believe that the AML Act that was passed had a lot of very good things, was not funded. And if you don't fund it, you're not going to do it. And I think now perhaps the environment is right to bring in all the stakeholders together in a way under the Treasury. Perhaps we haven't had that opportunity for many years to do, and say, okay, so this is what we mean when we say this. When we say you're going to focus on the effectiveness and the outcomes, we mean this. That when I transition from my suspicious activity reporting solution one to another, I don't have to do a parallel run for the 6 months to prove that there's no SAR left behind, right? Things like this, which really come to the fore, I think have to be hammered out in the US in particular.
Vesna, I guess the question for you again is, with our clients challenged in all different jurisdictions, if they ask you for advice on how to stay on top of all these changes, and to William's point, you got to wait till the changes are there. I mean, you can prep for things, but you can only do so much in terms of adding resources to something that you don't know is going to be final. If they call you and say, "Hey, Vesna, we're trying to figure out in jurisdiction X what we should be doing," what sort of advice do you give them?
Um, I think, of course, as you say, and as William has said, wait and see what the final is. But in the meantime, I always opt for what is going to give me consistency, because that is what gives me the ability to compare. And when I can compare, I can see how well I'm doing and that I'm doing it in the first place. So although jurisdictional differences are increasing, in my humble opinion, at the same time, there is more conversation globally. All the public-private conversations, all the Wolfsburg has extended their conversation to cryptos and payments. Some of the biggest ones are there today. There is a lot more conversation and awareness. And the fact that there is a challenge to the status quo, I mean, there's not been status quo. We've been going up in requirements all along, but there is a challenge to effectiveness from, for reasons that may or may not be about stopping financial crime. I think that in itself does promise an opportunity for us to have something that's better. And so if we have consistency, we're better able to see whether we are complying, but also where we are able to stop financial crime. And therefore, I would always opt for that until you know the actual detail. And when you know the detail is going to differ, that's when you have to look at where you have to vary your requirements, policies, procedures, and so on. But one thing that I think is that those annual and 6 monthly team meetings across the globe, they've never been more important, because where I think people get stuck is in this self-importance in different jurisdictions, and they just want there almost to be a difference. So we're going to do it differently, we're not going to listen to the global, and so on. And I think that balance needs to be struck again. And I think talking more within the institutions and getting people to look for similarity on purpose in order to be able to manage this more effectively, more efficiently, and stop actual crime, to David's and William's points, is really, really important.
David and William, back when the Wolfsburg Group was first formed, I was at the Bankers Association, and while I knew their early mission dealing with issues on correspondent banking and private wealth management, I always looked at what Wolfsburg did as, okay, if you're a large multinational, there's relevance, but I'm not sure the relevance thematically for mid-size and other banks. And over time, I've come to disabused myself of that position, because I think Wolfsburg clearly has been much, I don't want to say they weren't before, but much more active in the past decade, commenting on a whole series of things that I think you can learn no matter what size financial institution you are, some of the themes and recommendations that you folks have crafted. So David and William, obviously you've been very active in Wolfsburg. David, briefly describe them, but also give us a sense of why what I said is correct, meaning that besides FATF, financial institutions should pay attention to what Wolfsburg is opining on, because there's value there regardless of the products and services a particular institution have, because regulators look at what you guys have produced, and law enforcement does as well. So talk a bit about Wolfsburg. I wanted to make sure we spend some time on that. You're on mute again, Dave. There you go.
Having a day for it, aren't I? So
Okay.
thanks, John. So I mean, clearly the nature of the banks that make up Wolfsburg do mean that things like consistency across multiple markets is a bigger thing than if you're a single market bank, small bank, mid-tier bank, whatever it might be. But if you think about where some of the focus of the discussions in Wolfsburg's gone in the last 5-7 years, I referenced the kind of effectiveness definition earlier. I think that body of work, as it relates to like the management of politically exposed persons or transaction monitoring, in fact, monitoring beyond transactions for effectiveness, or how to think about stable coins and blockchain and cryptocurrency. Those are changes going on in the external environment which impact you regardless of scale, because probably two things. One, like we've all pretty much set up in a way that thinks through how do you manage this risk. There's a playbook for it across controls at onboarding and periodic review and how you monitor and screen. Different ways of going about doing that, but those controls broadly applied. So I think some of the experience that the big banks have, and hopefully are learning from and sharing, is relevant in multiple jurisdictions or multiple types of institution. But then I think the second thing is the trends in the external environment are impacting all of us. And so I talked about policy earlier, but if you thought about the technology trend, there's at least two like major transformational technologies potentially landing on us in the next few years that are going to disrupt how we do things in ways that we don't yet understand. And that's AI, which probably disrupts everything, and blockchain, which I think could be particularly disruptive to financial services. And that's before you think about stuff which is more at the edge of my field of vision on quantum computing and what that might mean for cryptography and so forth. So that set of issues that we're grappling with in different ways at the big banks and with some resources to do so, I think becomes like relevant to institutions of any size. So to the extent that like we're able to distill some of the things we're thinking about and learning and using the Wolfsburg platform for engaging across like other types of player in the industry, not just banks, but also the public sector, the regulators and law enforcement, like that's where I think some of the relevance comes from. And it has grown over the course of its lifetime, because I guess when it first started, it was responding to a pretty discrete set of issues around private banking mishandling of PEPs.
Right. William, you've been active there too, and you knew Wolfsburg while you were in the government, so it obviously has evolved over time as well.
Yeah, I mean, what I've always embraced about Wolfsburg is we're not unbiased, we're banks, but the concept was real information. One, in the early days, to come together and say, guys, we got to get our what together now, and start thinking about how we're going to accomplish the sort of the policy goals of this regulatory and regimes that were popping up at left and right. But it was also then to provide, this is what we do, this is how we do it. So when you say go do this, here are the practical implications of it and the challenges with it in a way that you can't do if you're an advocacy group or other things, right? And I think for the most part, we've stayed true to that. And that to me was the value. And back in the early days, you remember this, John, we cited Wolfsburg in the interim final rule for one of the early Patriot Act correspondent banking rules. Right. And felt comfortable doing that because it was, this is what we do, this is how we do it, right? Let's talk about it. David is absolutely right. The way things are moving today, and I say to people, whoever will listen, you will fall behind in financial crimes compliance in a heartbeat and not know it, because they're very rare, these grand pronouncements of policy change, et cetera. It's what everybody in the pack starts to do. And what a Wolfsburg group can do is to provide insight into that on a detailed basis, not just at a high level. And take digital assets, a huge push, right? The articulation of the basics of digital assets, how banks should think about intersecting with the digital assets and the various roles that are played from supporting the payments to issuing to custody will apply now more than ever, right? And our concern about the blockchain, everybody loves the blockchain, but it does not have the information necessary to comply with the travel rule, period. That's the type of discussion we can have, and that will touch institutions of all sizes in every place. Transaction monitoring that David mentioned, again, is strong support, because we had identified that 4 or 5 years ago, said we should do this, and when we got into it, like, ugh. And it has now moved to more the identification of suspicious activity, not just TM, but all the various ways. And then it gets to the heart of what every institution struggles with today. Do I pay up, have a system, and go? What if that system is okay but not great? How do I transition to the new whiz-bang stuff coming out of AI, et cetera? Give me some freedom, right? And I think the Wolfsburg group can comment on this in a way that is useful, again, appealing to a broader audience in addition to the mega banks, because we're all struggling with this regardless of size.
Oh, that definitely makes sense. In the time we have left, start with you, Vesna. Let's go into some conversations on technology, on AI, on challenges like misinformation, data quality. What are some of the things that our clients are asking you about? And then want David and William to talk a bit about that as well, because every program we do, there's always some section. If we're talking about compliance, we talk about technology, but we talk about it sort of across the board. But I'd like to know some of the key challenges that our clients tell you about.
Well, of course, as you would expect, absolutely everyone is talking about AI and its multiple meanings and applications in different parts of financial crime and what touches them outside of financial crime inwards. And I think we are all now aware that the solution, it's not going to be the next solution for everything, because we've seen a lot of technologies come in, and everybody's agreed, yes, it's life-changing, as David has said. It's a massive challenge to how we do things, but at the same time, it does have its limitations. And so people are saying, how do I apply AI, or where do I apply it? Others are progressing with it in lots of different areas. What I think is interesting is that a lot of this advanced analytics, let's call it, because not everything is AI, and not to go into all of that detail now, it really only sits properly when you have good policies and procedures and processes in place. And that's where we're seeing that those who don't have that in place, the non-banking side of the financial services sector, are still more dependent on people than banks, which are able to use their processes and policies to jump to the next level of the event trigger and event reviews and other advanced analytics, and connecting the dots and creating bigger picture where they're beginning to address financial crime more than just ticking the boxes of compliance, which is what we've been talking about all along. And then there are specifics in technology like real-time screening. And when I say screening, I mean transaction monitoring. I personally find it terrifying because there are reasons why we in financial crime, in AML, actually, we need to have also the distance and time in between, and how much more pressure there is and how many more mistakes we're going to make with our clients and customers. But at the same time, fraud has been in the real-time space for a long time. So I'm sure there's quite a lot of learning between the two. And I'd love to hear what William and David have to say about that as well from their experience. And then the big question there is like everybody, when we talk about advanced analytics and sharing information, right, is a big part of that internally and externally. How are we managing to be fair to the clients and customers? Because I'm beginning to hear really difficult stories of people who are more than clean, but they've had their Uber accounts shut forever and they can't get through to anybody to talk about it, because on some analytical profile, they look like they're being dodgy for whatever reason, and they can't get taxi in a certain country. It's silly, but it's going to get more serious. And I think when we are talking about public-private exchange, we're also talking about banks and other institutions exchanging information about clients without the legal process any longer. Not that legal process is always right, but it does put a buffer in between, and now we're not going to have that process. So with all this technology and exchange of information, there are very real concerns, and I find it a bit scary, that element of the bias, and how we're going to be able to ensure that we don't ruin reputations and livelihoods of people who just can't get past this increasing administrative mountain in front of them.
William, two parts. One is sort of building off of the question on technology and artificial intelligence, data quality, all that sort of the challenges. But also, the Wall Street Journal this week had a headline that AI is now impacting the loss of white collar crime jobs, or white collar jobs, sorry, not white collar crime jobs, white collar jobs. So my point is, the people that report up to you, what's the concern that employees have in the AML space in terms of job security? And then because criminals use AI as much as those in law enforcement, what are your big challenges managing that?
Yeah, great question. So, my sort of cynical view of AI at this moment is it's like hiring a really great junior analyst. Doesn't need to eat, doesn't need to sleep, doesn't complain about return to office, and will just go nuts. But if you think that's going to solve your problems, it won't, right? And I think the first issue that hits everybody, like getting hit in the face with a shovel, is your data quality issues, your data governance. It still matters. If you put it on top of bad data, you're still going to get bad results. So it's interesting to me that we've spent a lot of time taking a deep breath and saying data governance that we've been talking about in sanction screening and other places, it needs to be expanded, because if you don't and you can't verify your data that's going in, it's not going to help you that much. With regard to how we think about things, right? I mean, look, everybody sees it and they're kind of looking around nervously. I don't know what the actual impact is, because we've always sought to minimize human being intervention in the work that I see AI doing, right? And or accelerating my ability to execute through. Would that have a net impact on resource? Potentially, right? I don't want to say it won't, but it's if it's a force multiplier in a positive way, and we spend more of our time over here rather than over here, you're talking about a gradual transition to something that I don't think is going to be quite as stark and shocking for what we do day to day. Certainly saw the article and saw the tag-alongs to it saying, the layoffs, et cetera. My number one message is, we've got so much that we have to do, so much interface interaction. We've not really begun to crack how deep we need to go with our business partners to understand and to be that partner that we ultimately want to be. That's where the focus should be. And what will be in terms of how the technology develops. But we've lived through several cycles of this. This obviously is different in scope and magnitude. But it's something that I think, until we know more, we're going to manage through. And again, we don't pay people to do their jobs. We pay people to think. And if you pay to think, then that's always something that there's going to be a high need for, especially people who become skilled and knowledgeable. So for me, it's a pragmatic view at this point on AI. We've not seen the widespread deployment, seen a lot of really cool things that can happen, and then looking to say, how can we do this? And the immediate impact is to really dispense with a lot of the work that nobody really wants to do anyway. It slows us down. So that's positive, and we'll have to adjust as it evolves.
David, additional thoughts on that? So I agree with William on kind of where we are today. I guess if you try and peer into a crystal ball and imagine a couple of years forward, like a couple of things that I think like I'd have conviction around. One will be that the technology will change certainly the work of a compliance officer, and partly that's about the type of work you do, but I think it's also about like what your what value you're bringing. So, I think you can separate out knowledge and skills. And if you went back 20 odd years, there's a heavy premium on knowledge, knowing like what the reg is and what it means and how to interpret it. I think some of that will get automated, democratized, so to say, encoded. And there'll be a higher premium on the skills. And the skills, I think, is about sort of ability to partner with, influence, solve problems in the first line. The compliance officers of the futures are going to that's going to be the thing they bring to the table. It will be an independent way of thinking about the challenges. So I think it'll change that. Like, I've got strong conviction there. The second would be that the way we go about like monitoring, screening, even ID and V, some of those processes, notwithstanding the really interesting and legitimate point Vesna raises about like unintended accidental exclusion from the system of people who shouldn't be excluded, and you're sort of in a dystopian future where you can't even find someone to talk to test it. Like we will run into that problem, and it will be a problem we'll have to address. But notwithstanding all of that, I think the way that those processes that we've kind of built today as the answer, but which we know from false positive rates and so forth isn't a great answer. I think that way of doing things has to change significantly. I completely agree with William that the data foundations for it have got to be there, or the likelihood of success will go down. But like what it looks like, I'm not completely sure. I'm not completely sure it's the way that some of the vendors out there are suggesting it. But I think it'll be really, really different. So I'd hold out those sort of two strong convictions if you look a little bit further forward, that we are, we're going to see a kind of, it's a cliche, but a bit of a paradigm shift on how technology changes what we do and the way we go about achieving the outcomes we're seeking.
We didn't talk about this much, but FATF and others have warned about deep fakes, misinformation. So obviously all of that is something that has to be navigated as well, which you've both of you have alluded to. And again, we're going to have to see how this all shakes out. And I think a lot of it is, it's like machine learning from years ago. People would just use the phrase, but wouldn't really define it. And so, I mean, I think we're getting the same sort of talk about AI, and I think it's going to really depend on what do you mean specifically, what industry are you in, what's the data issues, all those sorts of things. So obviously much more to come, and we'll certainly follow up with additional programming. Before I ask you folks for some final takeaways, I want to thank everybody for joining us for this November edition. We hope everybody has a wonderful holiday season, and obviously send us any questions that you may have, and we will certainly follow up with you. But Vesna, let me start with you. Anything either we haven't mentioned that you want to highlight, or a recommendation or two to compliance officers going forward? What would you tell them if they come to you and say, Vesna, I'm trying to stay on top of things. There's so many various challenges going on. Where should I spend some of my time? Well, so talk about that, or anything else you want to mention.
I want to repeat what William said at the beginning, which is the program is still really, really important. It's very important to have good policies. They don't need to be super complicated. Of course, they have to reflect the jurisdictional differences and all of that stuff. But, and then from that, you have the procedures and the processes that hang off that. And only then can you plug in all the technology and AI. So that will still require a lot of, to William's point, again, thinking. And to David's point, I think the skills he's talking about is that thinking of how do we actually do this? How do we connect? Because I dare to say that 70-80% of the time what we're doing inside large institutions, but even small ones, is managing people and expectations and getting it done with somebody. It's not about taking the regs, having a look and writing it down for whatever applies to my industry. So I think that holistic view and bringing consistency despite the current trend of fragmentation, I think it's going to serve us well in the future of better, deeper exchange of information and public and private partnerships.
William, final thoughts?
Yeah, first of all, just again, thank you, John, Elliot, AML RightSource. Appreciate this chance. This is fun to have this conversation with my friends. I would say, as I think about all that's going on, don't, financial institutions sometimes can have a short memory. I think we in compliance don't, and we've seen things cycle in and out. You got to keep your eye on the long term, right? Because rhetoric comes and goes. It's what's built in underlying that could come back later. So I think about all the opportunities that we have, and I would say stick with what we're doing, right? Get your program up, make it as we talked about, continue to crush it, but then let's continue to dive into being very particular with what we'd like to see differently, right? We're going to know this better than anybody else. The leaders of the institutions know the expense. That's true, but we can facilitate this, and that to me is the exciting part. It's always been the exciting part of financial crime, because there is a dialogue to be had to say this is how we do it to achieve the results, as opposed to we just don't like regulation. So I know that's a little pie in the sky, but that's what I do focus on.
And I think, William, too, this was not a career path decades ago. It's
No.
clearly is a career path in a variety of ways, and we want to encourage the next generation of folks to look at this as what you do matters. You'll have to navigate a lot of things, but it's really important. And, I think it's essential for all of us to make sure we continue to recommend people look at this is an area where you can join, and you could come from a variety of skill sets. It doesn't have to be like the old days, it was lawyers and people just did compliance, all sorts of ways. David, final thoughts?
So, in building on that thought, actually, John, we've spent an hour, we've had a really rich conversation. I don't think we talked much about my kind of third trend of geopolitical trends, change, sanctions, challenges in a much more complex, volatile world order with supply chains reconfiguring and so forth. If you find that stuff interesting, like you can find a great career dealing with financial crime challenges, because that's not going away. That's only becoming more. So like one of the banner trends, I think, would be that set of challenges. Actually, I refer everyone, if they're watching this on playback, to just go back to what William was saying about the things to focus on. Because if my advice to compliance officers was going to be, look at what you can control and put your energy into that, because that's a pretty good way of avoiding the sense of overwhelm which comes with all of the change we've been talking about. I actually think William laid out really well. Get your program right and then build from there. And I think that's great advice for anyone who's watching this, trying to focus on what next they do.
Yeah, I totally agree. And we're going to be doing some interviews and podcasts on sanctions compliance and some other issues in the next couple of months, because you're right, it deserves its own focus and its own time. I want to thank the panel today for the excellent discussion, and obviously just really the tip of the iceberg. When you're doing an hour, hopefully we've highlighted some spaces where you can spend more time and energy, and we will certainly do that as well going forward. I also want to remind folks to subscribe to our AML conversations and our This Week in AML programming. Go on our website. We're also very active on LinkedIn, and really thank David and William and Vesna. I know how busy they are, and really appreciate them sharing their insight today. So everybody stay safe. Thank you so much for your time.